So you've decided to buy a house and you've already chosen your realtor. So what's next? Hi, I'm Jeremy James with Lifestyle Real Estate. Welcome to our 6-part series on buying a house here in Central Kentucky. The next step you're going to want to do is get pre-approved. A few years ago, this was basically an option. These days, it's hardly an option anymore. It's almost expected across the board. And most agents, like myself, we're going to expect you to get pre-approved before we ever even go out and see a house. The reason? It's a lot like forgetting your wallet before you go to Walmart or McDonald's, right? You want to make sure that you're looking at properties, at things that you can actually afford, that you can get pre-approved through. If you can't get approved, you're going to need to take additional steps prior to, whether it's working with a credit repair company like Bluegrass Credit Services or whomever, to get yourself ready to go. There's no sense in me taking you out and showing you a property that you can't get financed for or you can't afford. So that's one of the big things, is get pre-approved. So what do we do? You got to choose a lender, right? So a couple of things you need to decide right away: whether you're going to go with a traditional bank or whether you're going to go with a mortgage lender, what we call a loan officer. With the traditional bank, they tend to be a lot more conservative in their lending. Their rates may be higher, etc. You're also probably not going to get a hold of them on weekends or after hours. So a lot of that service begins to drop. A lot of the things that get done in real estate, especially when you need a pre-approval letter on a house that you just saw at 6 p.m. on a Wednesday night, you're going to want that letter quickly, and you're going to want a loan officer who's responsive to that need. So you're going to want somebody who's actively working with you. Me personally, I tend to work with loan officers. I tend to refer business to loan officers simply because I have good relationships with them, and they're responsive to the needs of my people, especially when they're local in the Central Kentucky area. They know the needs. They're on the same time zone we are, which can make a big difference rather than dealing with somebody who's out in California, 3 hours different, trying to get stuff and having to wait for that 3-hour time delay. That's not fun when you're on a deadline. So once you've decided whether you're going to go through a bank or a mortgage lender, then what you've got to look at is, what are their rates? Are they offering you a good interest rate percentage for your mortgage? I've seen differences in rates that may be 1/2 to 3/4 of a point different depending upon which loan officer you use. I've also seen clients of mine, at my recommendation, take 4 different lenders and negotiate between them and force their rate almost 1/2 point lower. And that makes a big difference in the price of your home and in how much you end up paying for that mortgage over the long haul. So finding out those rates, making sure you have a good rate that works for you and the best rate for you, is crucial. On top of that, not only rates, but what are their fees? So they'll have loan origination fees. They'll have other fees that are tacked in there. Some folks don't like those fees because they may be a little bit more front heavy as far as going towards your down payment and so forth. But I'd gladly pay a little bit more in fees up front to get a better percentage rate on the back side, where I'm going to earn that money back over the long term. So when you look at your loan officer, remember, are you going local with a brick and mortar bank, who tend to be a little bit more conservative, tend to have a little bit higher rates, and normally aren't as responsive? Or are you going to go with a mortgage lender who is typically a commissioned person who works to close your loan, has a vested interest to close your loan, usually very responsive, especially after hours when you're on deadlines? And then who has the best rates? Which one is going to give you the best rate for your home? Which one is going to give you the best fees? And look at those in combination. Now, they're going to ask you all sorts of questions about your income, about how long you've been at your job. They're going to pull your credit. It's a hard credit pull, and they're going to look at those credit scores to see where you are. If you need credit help, we have companies that we work with, Bluegrass Credit Services, that can help you get your credit back up to where you need to be to go buy a home. Sometimes you are going to be good to go and your credit is just fine, and we'll be smooth sailing right with a pre-approval and get going and get you out looking for a home. I'm Jeremy James with Lifestyle Real Estate. Stay tuned for part 3 of our 6-part series of So You Want to Buy a Home.